Michelle's in Georgia. Dave, I was surprised when another insurance agent told me that in your book you admitted to having whole life insurance in your portfolio. Uh, the insurance agent lied. Michelle, I didn't say that in my book. I admitted that when I was in my early 20s that a goober from college came and sold us a whole life policy, and I was so stupid I bought it, but I canceled it once I learned mathematics. What a scumburger. His belief that it would help you reduce taxes. I had asked that if you still had it, and that was unknown. Because I sell life insurance, I want to do right by my customers. Is there a condition that someone should have a whole life policy? If so, why? No, there is not. Whole life insurance, cash value life insurance, is the payday lender of the middle class. I've been screwing the middle class for decades. No one sells whole life insurance except insurance people. No one believes in it in the financial planning arena that doesn't sell it. All the independent thinkers and all the people who do financial planning based on numbers and mathematics believe whole life is a ripoff and don't sell it. The only people who tell you it's a good idea are people who sell it. That's a pretty sucky record, really, if you think about it. And this guy is a straight up freaking liar. No, I did not say in my book I had whole life insurance for tax advantages. I've written a bunch of books, and I really do know what's in them because I really wrote them. And it's just simply not in there. This guy's a bonehead liar, and you really should avoid doing any transactions with him. As far as whether you should sell whole life, absolutely not. There's only two kinds of people that sell whole life insurance. There are those that know that it's a ripoff, and therefore they're crooks, and there are those that are too stupid to understand the mathematics, and they still continue to sell it, or they've just kept their head in the sand and refused to look at the mathematics. The mathematics are pretty simple. Whole life insurance is roughly 100 times more expensive. So it's 20 times more expensive, I'm sorry. So about $100 a month buys you the same amount of whole life insurance that $5 a month buys you in term insurance. What does the other $95 go to? Since you're being charged $100 instead of $5 for the same amount of insurance. It goes to build up a cash value inside the policy, which for the first 3 years is zero. What do you call that? Front-loaded heavy commissions. I mean, if it's a $100 a month premium, that means that they are collecting almost $4,000 worth of commissions before you make a dime. I don't think so. And their commission's 100% of your savings for the first 3 years. Look at a whole life policy. Look at the cash value buildup. 0, 0, 0 first 3 years. That's horrible, you guys. That's not a difference of opinion about, a few percentage points in how a mutual fund is charged. A mutual fund charges 5.75% for the ones that do charge commission. These guys charge 100% for the first 3 years. It's unbelievable. It's unconscionable. And then once you do start actually having a cash value, then you can calculate the rate of return on your money because we know what the insurance costs because we can compare it to term. Term covers the cost of the insurance. So we can figure out you got $95 going in, and then we can watch it grow and put that into a financial calculator, and we can back out the actual yield. Those of us who know how to do, a financial transaction with financial calculator. Here's what you'll find. The average cash value policy will yield you, net of all expenses, 1.2% on a whole life policy, 3.6% on a universal policy, and 4.3% net of all expenses. Now, they'll quote you 10 and 12 and all this other crap on a variable life. And so it's a horrible rate of return for long-term investing. Absolutely horrendous rate of return on long-term investing. Oh, and then when you do build up the cash value, if you have a $200,000 whole life policy and you end up with $50,000 in there after you get past those zeros and the horrible rate of return, and you finally end up with $50,000 in your $200,000 cash value policy and you die, you know what they send to the beneficiary? $200,000. The amount of the insurance. What happened to your investment? Well, they keep it. So you have a savings account where the first 3 years they keep all your money. After that, they pay you 1%. And after that, when you die, they keep your money. This is a horrible savings account. It's a payday lender of the middle class. It's absolutely ludicrous. So, no, I wouldn't sell that stuff to anybody. I wouldn't even sell that to an enemy. I wouldn't want my name attached to the lack of integrity of selling a product like that. And if you're a whole life insurance agent and that pisses you off, good. Because I'm a consumer advocate. I'm not here for you. I'm here for my listeners and what takes care of them and what serves them. And I've consistently said this on the air since the first day I turned on this microphone. I have never wavered from it one time. And I certainly didn't say in one of my books, you slime ball, that I own this garbage. Unbelievable. Unbelievable. So, no. Don't sell whole life. You shouldn't sell whole life. Don't own whole life. You should always buy term life insurance for $5 instead of $100. Do your investing anywhere else. Crap, if you put it in a fruit jar, you'll end up with more money when you die than these people. Because at least it'll still be there. It doesn't just poof, disappear. Puff, the magic dragon of finance. It's unbelievable. So, horrible, horrible product. Hope I wasn't unclear.